Bitcoin pairs really didn't start to recover until after quantitative tightening ended. And when you look at this chart, you can see that last cycle it topped out around 75%. And I when I think about a 4-year cycle, I don't really think in terms of the highs. I think in terms of the lows occurring approximately every 4 years. Yeah, I mean, gold's been doing really, really well, which makes sense. I mean, it normally does pretty well under environments like this. I think as long as it's not changing, it makes sense to ride that Bitcoin dominance train for as long as possible. Generally speaking, you want to buy at low risk levels, and then you generally want to sell at high risk levels. Are we here and there's no recession, or are we here and there is a recession?
Welcome back to another show today. I'm here with Ben, a man who needs no introduction. How are you doing, Ben?
Great. How about you? Pleasure to be here, by the way.
It was great meeting you in Nashville, so thank you so much for doing this with us. Really, really appreciate. You have a bachelor degree in mathematics and a PhD in nuclear engineering. I mean, how have you started your journey in Bitcoin?
It's a good question. When I did my undergrad in math, we had to take few electives, and one of the electives I picked was cryptography. This was back in 2011. So I guess that was when I first got interested in crypto. But when I say crypto, I really am talking about cryptography. And then because of that interest, I started loosely following Bitcoin. And I remember watching it sort of in the 2013 rally, and then watching it come crashing down in sort of 2013, 2014, and not really knowing if it was ever going to come back or not. I think it crashed from it was like 1100 all the way back down to 100 or something, or 200. It was a crazy crash back then. But that's how I got interested in crypto to begin with. And then I went to grad school. Some of the fellow grad students there, they were interested in Bitcoin. I made all the mistakes that everyone always makes with it. And then I graduated with my PhD, and then I started doing a postdoc at a national lab. And then while I was there, I started my YouTube channel to try to help people figure out sort of the larger trends. And then I did that for a little while. And then I think in like early 2021, I quit my job and I just started doing this full time. So that's kind of my brief background in a nutshell, I guess.
Amazing. I'm actually very grateful you've done it, because I've been watching your videos ever since we were discussing your camera, and you managed to build a fantastic platform, by the way, which will be in the description down below for those of whom they don't know. When it comes to Bitcoin dominance, you are the man. What made you look into it?
Yeah, I think what really made me look, because again, we've all made the mistakes, right? Everyone's made the mistakes throughout the cycles. You'll learn a little bit each cycle. You learn kind of how the cycle works, and how to preserve the Satoshi valuation of your portfolio. So essentially what happened was, I certainly made a lot of mistakes several cycles ago. And then the next cycle I got a little bit better. The next cycle I got a little bit better. In the 2017 cycle, the 2016, 2017 cycle, I like to think I did pretty well, especially like selling near the tops, right? Near the tops back in 2017 and early 2018. But the mistakes that I made that cycle really didn't occur until well after the cycle peak. And essentially what happened, what I did was I was buying altcoins. I was buying altcoins sort of back in this range. This chart right here is basically the altcoin market against Bitcoin. Is total 3 minus USDT divided by Bitcoin on TradingView, which is essentially just the altcoin market cap divided by the Bitcoin market cap. And so back in 2018, this is when I was I defended my dissertation like right here, right in this area. But this was an area where I was buying Bitcoin, I was buying Ethereum, but also buying a lot of altcoins, and some of those altcoins did okay. But then a year and a half later, I remember looking at this chart and looking at it down here, and I just remember thinking like, well, I would have just been so much better off like just buying Bitcoin rather than buying altcoins, during this period. And it wasn't necessarily intuitive, because it's not like the altcoins that I bought in late 2018, it's not like they were down on their USD pairs, but I was like looking at it and I'm like, but they're down, they're down 50% or more against Bitcoin. And I was like, so here I was thinking I was a genius by buying altcoins and watching them go up against Bitcoin and go up against the US dollar. But what was really happening is they were only going up because Bitcoin was going up. And then They didn't really start to do well until, well after QE had started, and really after the Fed had cut interest rates to basically zero. Now in 2017, obviously rates were not zero when altcoins got that rally, but basically sort of this lesson about Bitcoin dominance, a lot of it came from this chart, and it was just the idea of, hey, whenever altcoins reach parity with Bitcoin, meaning when the altcoin market cap is equivalent to the Bitcoin market cap, this is 0.99, so about one or so, right? Whenever the altcoin market cap is equivalent to Bitcoin's market cap, that's usually the top for altcoins, at least on their Bitcoin pairs. Maybe not their USD pairs, but it's usually the top for altcoins on their Bitcoin pairs. And, as I saw that top in September 2021, and then we got this lower high in January 2022, and then we got into the bear market year, and it became, increasingly obvious that it was a bear market, it just made a lot of sense to assume that every rally that altcoins would get would eventually fade, and they would eventually bleed against Bitcoin. And, when I was looking at this chart after a while, I remember making this connection, at least with monetary policy. Now, I don't, it's hard to know for sure because it's like we only got one data point here, but so far it's worked out, right? So far it's worked out. But essentially, I was looking at this chart and looking at this light blue line, which is total assets held by the Federal Reserve. And I just noticed that all Bitcoin pairs really didn't start to recover until after quantitative tightening ended. And so I remember thinking like, well, I should have just stuck with Bitcoin throughout that entire phase and only really diversified after QT ended, after quantitative tightening ended. That way I would have preserved the Satoshi valuation of my portfolio. And so this cycle, I just keep saying the same thing, right? I just keep saying like, well, there's two things. All Bitcoin pairs are likely going to go to the range lows eventually. And it could also correspond to whenever the Fed decides to end quantitative tightening, which still hasn't happened yet. So basically, it was just me making all the dumb mistakes of buying altcoins, watching them bleed back to Bitcoin, and then in a future cycle deciding, hey, I'm going to do it a little bit differently this time and see if maybe I can preserve the Satoshi valuation of my portfolio. And so then I've just been tracking Bitcoin dominance and essentially assuming it's going to go higher until either all Bitcoin pairs are at the range lows and or the Fed ends quantitative tightening.
We've seen a new all-time high. I think it was today or yesterday for the dominance. How high do you think is going to go in this cycle?
Well, a new cycle high, right? My target right now is 66%, right? I don't know exactly where it's going to top out, but if you look at this fib retracement tool on Bitcoin dominance, which honestly I don't usually put a lot of weight into this kind of stuff. I think momentum is better. So it's better, instead of predicting where it's going to stop, just as long as you think the wind's blowing in that direction, just remain bullish on it, right? But you can see that as dominance has hit sort of every one of these fib levels, it then kind of stalls out for a little while before then ultimately going higher. And that next level is about, 66%. And that would also, by the way, correspond to alt Bitcoin pairs, potentially revisiting this trend line right here, right? I mean, and alt Bitcoin pairs just keep working their way down this trend line. And so, if it tags this trend line again, that I would assume would probably correspond to 66% Bitcoin dominance, plus or minus a percent or so. But that's at least a short-term view, right? I think 66% is in the cards. It's possible that could be the top. But the way I would look to call a top is I would look at monetary policy, right? And see if the Fed's making any changes. But also, there's this other metric that I use a lot, and that's Bitcoin dominance plus USDT dominance plus USDC dominance. And when you look at this chart, you can see that last cycle, it topped out around 75%. I mean, obviously, it did wick higher later on during this like parabolic rally by Bitcoin. But, really it started going down after tagging 74 to 75%. Right now, it's around 71 to 72%. So I'm still thinking that this metric is going to fill that, that gap right there, hit that level, same level it hit last cycle when quantitative tightening ended, and then we'll transition into another phase of the market cycle.
That makes sense, and thank you for explaining it so well. There is a very binary kind of mindset out there. There's some people saying, oh, this time is different because we have ETF and we have Michael Saylor, we have Bukele, we have people buying consistently. And do you think the 4-year cycle is dead? I mean, can we Can we respect it, or it's something is gone forever?
For now, I think it's pretty respectable. And it's not even just a Bitcoin thing, right? I mean, and I when I think about a 4-year cycle, I don't really think in terms of the highs. I think in terms of the lows occurring approximately every 4 years or so. So the next low, my guess, is going to be near the end of 2026, is what my sort of baseline assumption would be. By the time you're out near the end of 2026, I imagine that Bitcoin will be forming some major low. The harder question to ask is, where does the peak occur within each cycle? And so far, every cycle we've had right translated cycles where the peak occurs 1 year before this cycle low. So this, Bitcoin has done very, very well over the last few years. So I would say the 4-year cycle is still alive. But again, earlier I mentioned a minute ago, I mentioned that it's not even just a Bitcoin thing, right? Like if you look at the S&P 500, it has this tendency to, find lows oftentimes in like midterm years. And a great example of that is looking at the S&P in say like the 1960s and 1970s. This was a low in 1966, 1970, 1974, right? Every 4 years or so. And then there was another one 4 years after that, 1978. And that was a major low. And then you go over here and you can find another one in 1982, right? So it just seems like there's these major lows that occur approximately every 4 years. Even in recent years for the S&P 500, right? You had a low in 2014. Now it did sweep that low about a year later, but that was a significant low. You also had a low in 2018. It obviously swept that as well with a recession. But you can see, and then also 2022. So you can see there is some validity to the idea of a 4-year cycle. But I think if you're going to say, are we in a 4-year cycle? I think it makes more sense to think about it in terms of lows rather than highs. I think that's the way you should think about the 4-year cycle.
Like you said, it was following the macroeconomics, right? What happens to the S&P? What happens to everything else? Gold has gone bananas lately. Do you think, today we've seen a nice pump. We are now at 91 something. Do you think we will catch up with it?
Yeah, I mean, gold's been doing really, really well, which makes sense. I mean, it normally does pretty well under environments like this. And if the S&P 500 or Bitcoin were to get deep corrections, it would likely cause gold to also get a deep correction. But I'm going to assume that gold would likely get back to new all-time highs before the S&P 500, even in those corrections. And we already saw that, right? We already saw the S&P drop, like 20%. And while it was dropping, gold also got a correction. But it's almost like in order to see the drop, you actually have to go to the daily time scale, the daily time frame for gold, and you can see it just quickly regain those highs. So I think that gold is probably going to continue in this type of environment where it outperforms the S&P 500 for at least a little while longer. And it could be one of those things where it just continues this path until quantitative tightening is over. For Bitcoin, Bitcoin has been doing better than most cryptocurrencies, and we looked at that through the lens of Bitcoin dominance, right? What I think right now that we're sort of in is essentially what happened after, we get these death crosses, and we had one in 2023, we had one in 2024, and then we also had one here in 2025. And you'll notice, and by the way, that's not the only ones, right? We also had one here in 2021, and then we also had one. I mean, there's plenty of them that occur. Here's one in 2019, right? But what's interesting about them, and even right here, right? What's interesting about these death crosses is that they sound bad, but what usually happens is you rally on the other side of death cross, right? So you dump into the death cross, and it's the very act of dumping that causes the death cross in the first place, the 50-day SMA to go below the 200-day SMA, and then on the other side of it, then you get these rallies. And so we got it in 2021, we obviously got it in 2023 and in 2024, right? We had these rallies after the death cross. We also had one in 2019, but that ultimately led to a lower high. So, what I'm thinking right now in terms of Bitcoin is that, this rally that we're in was always a very likely rally to have, because we almost always get rallies after death crosses. Even in cases where they set lower lows, you would expect a rally, right? And so this is the one example where in recent history where it didn't. Well, I guess there was also 2022, right? But you had this rally where it basically rallied back up to where it broke down from, right? And in the bullish cases, right, they ultimately just they got these rallies, they went north of the 200-day moving average, which is this white line, right? White line. And then they got a correction, and then it formed a higher low. So right now, Bitcoin is just now above that 200-day moving average. I would argue that at some point there's going to be a pullback, well before we get to a new all-time high, right? There's going to be a pullback, and at that point, it'll be time to sort of face the music as to whether it's just a higher low, which is what we want to see, or if it is a lower low. The good news, though, is that even if it is a lower low, like even if it does play out like 2019, which is, by the way, I mean, the reason I bring up 2019 is because that was the year that the Fed ended quantitative tightening last cycle, right? So that's at least the reason why I bring it up. And the good news, though, is if it is 2019 and it just ends up being sort of a sweep of this high, or sort of a sweep right there, and then it goes back down. The good news is that it could still form another lower low and still not necessarily be like a full-blown recession, right? And the reason why that's important is because the last low was able to stay above the 2024 high, and it was also able to stay well above the 2021 high. So my argument is that, and I think I've said this like a lot for the last couple of months, like my argument is that as long as Bitcoin stays above sort of this level here, as long as it stays, and it could go in there and still be fine, right? But as long as it stays really above that, then I don't really think that confidence is yet lost in the cycle, right? I think that there's still hope that that the cycle could live on, and we maybe get a right translated cycle. If you go below that level, right? If you go below that level, then you probably just are in for not a great market, probably not until, say, after the next 4-year cycle low, right, near the end of 2026. So that's kind of where I am right now. And I've sort of, as long as we stay above really like the 2024 high, then I think market structure is still intact. And by the way, in 2016, 2017, Bitcoin tested, in 2017, Bitcoin actually wicked below the 2016 high, right? And so because we haven't even done that yet, it does leave some flexibility if we do end up getting, say, like another sell-off or something like that. So, I mean, for now, Bitcoin has held up much better than, honestly, most everything else. I mean, even what's crazy is even the NASDAQ, right? Even the NASDAQ went all the way down to its 2021 high. It even went below its 2021 high. So really, I mean, that's one of the, when we talk about Bitcoin dominance, you could almost think of it as not even just Bitcoin dominance in crypto, but you could almost argue that Bitcoin has been doing pretty well compared to basically everything else for the last several years. Now, obviously, at some point that will change, but I think as long as it's not changing, it makes sense to ride that Bitcoin dominance train for as long as possible.
Maybe the ETF are going to change the inflow and outflow, but are you expecting like less of a pump and less of a dump, let's say, when we face eventually the bear market?
Yeah, I mean, like we have diminishing losses and diminishing returns. So like we have diminishing returns in the sense that every cycle tends to be a lower high in terms of like from the low to the peak, for the most part. So I would probably expect diminishing returns. So we're probably not going to see us like the exact same type of rally that we got last time. Like it probably won't be as intense. That's not really a reflection of Bitcoin being weaker. It's just a reflection of the market cap being a lot higher, and it just takes exponentially more money to move the market. And with that, the good news is, well, the bad news is that you get diminishing returns, right? But then the good news is that you can also then get diminishing losses, where the bear markets aren't quite. If it's a normal right translated cycle, then I would expect each bear market to be not, a little less bad. And you can actually see that by looking at all the prior bear markets, right? Like the first bear market was a 94% drop, and then the next one was like 87%. The next one was 84, I believe. Yeah, and then I think this one was 77. So, I mean, you can see that each bear market has gotten, while 70 to 80% drops don't feel great when you're going through it, like it is not as bad from each cycle to another. And you can also see that you get diminishing returns, right? Like every cycle, say like from the low to the high, that's like an 11,000% rally. This one over here was a 2,000% rally. So far, we've had a, like a 5 to 600% rally, right? So I just think that it's an artifact of a higher market cap. So you're right. It's more than likely you're going to have diminishing returns and diminishing losses.
People say, oh, you don't sell your Bitcoin. Well, it depends. Like, I'm all in. I have next to no fiat under my name. So it comes interesting to see and evaluate when it could be more strategic to sell a portion of my Bitcoin, because, for example, if I was sold today as opposed to a few months ago, there will be a difference in price. Do you also have a portion of your portfolio you try to, I know it's impossible to catch the top and the bottom, but try to be, quote, a little bit more strategic and say, hey, maybe instead of selling when I need, I can design a bag in which I use to project and figure it out when it's convenient to sell, if you know what I mean.
Yeah, well, the first thing I would say is I use modern portfolio theory to give me an idea on like portfolios that maximize my risk-adjusted returns. This is essentially what I use to sort of construct a portfolio. But in terms of actually like buying and selling, I primarily just use this risk metric, which basically goes from 0 to 1. And generally speaking, you want to buy at low risk levels, right? And then you generally want to sell at high risk levels, something looks like that, right? I mean, like, and depending on your own risk tolerance, you could get a little bit, cuter with how you want to go about doing it. I just do it dynamically. So like, if the risk were to get into that like 0.7 to 0.8 risk band or something, like that could warrant selling some, or 0.6, 0.7. But it doesn't mean I sell everything. If my Bitcoin is up 5 or 6x over the span of a year or two, then taking some profits off the table at least allows you to live to fight another day in case there is a 70 to 80% drop. But I don't really sell. I mean, the only time I sell a majority of my Bitcoin, where I basically sell almost all of it, except for like my hodl bag or whatever, is when it goes up to the higher wristbands, right? Like when it goes to the 0.9 to 1 wristband. This metric was created in 2019, and it actually did a pretty good job of catching the top last cycle. I mean, it wasn't like perfect, but it did a pretty good job of identifying where that top was. And it was also really difficult because back then, so many people were convinced that Bitcoin was going to go to 300K. And I remember, I distinctly remember, I think I sold like 87% of my Bitcoin, and Bitcoin was only at like 60K. And then it went to 64, and I felt kind of like an idiot, in the short term. I'm like, wow, I mean, here it is going higher. But then, a month later, it was down at like 29K, in the summer of 2021. So I've learned to just kind of like stick with it. So like whenever this metric flashes like 0.9 to 1 risk, or even 0.8, even if it's like 0.85, anywhere between 0.8 to 1, I would definitely think it makes sense to de-risk for me. But as long as you have a long enough time horizon, even those high risk levels back then, today the price is higher than that, right? And the risk is only 0.5 to 0.6, right? So like basically it depends on your time horizon, right? For a lot of people, they don't want to just sit through like 80% drops, so they'd rather try to sell some of it and capture those gains and then theoretically buy back at the end of the bear market. But there is something to be said for people that never sell. They just sort of accumulate for years and years and years and years, and then eventually they look back and they're like, oh yeah, like it was a good decision. I'm glad I never sold, even though I lived through the 70-80% drops. Like as long as you're willing to sort of wait, then you're still fine. But this is what I use to really buy and sell.
I also have a small bag that I like to play the market with. I also have a small percentage in altcoins, speculation bag there, but those are small percentages. And if they go to nothing, I don't care. It's like going to the casino and gambling, right? My money is in Bitcoin, but I like to speculate every now and then in some projects like Chainlink or Cardano, Ethereum. And like you say all the time, they've been bleeding against everything, mainly because, like you pointed out earlier, Bitcoin dominance is sucking everything up. And are you expecting an altcoin season at some point to kick in whenever there is I call it fountain of profit, if it makes sense? Historically speaking, after we've seen Bitcoin running, people are taking profit and speculate into altcoins, right?
I think in order to get it, look, it's always possible. I mean, we've already had I think you could argue we've had 2 alt seasons in the last couple of cycles, right? You had this one right here at the beginning of 2018, and then you had one at the beginning of 2021. It's always possible to get one, but what I would argue is that in order to get one, you'll notice that alt seasons have started at lower valuations on their Bitcoin pairs than they currently are. So, the reason why I continue, and it doesn't mean that altcoins can't go up, right? Like if Bitcoin goes up like it is today, altcoins go up. It's just that over months and months and months, you'll see that they're just being like they're slowly being devalued against Bitcoin. So it's not that I don't believe alt season. Like I do believe alt season can happen, but I just think that it's premature to call for alt season until all Bitcoin pairs are stayed down here. And once they're down there, then it still doesn't mean that you immediately get alt season, but it at least means that you have the conditions, like the conditions are satisfied so that one could occur, right? Every time we get a rally by alt Bitcoin pairs, they just fade, right? Like they just fade. And I keep saying, in order to come up here, they first have to come down here, in my view. So that's why I just continue to fade the alt season calls. It's not because like I'm anti-alts, or it's not because I don't think alt season can't ever happen again. It's just because the chart is telling me that there's a really good chance that alts will continue to drop against Bitcoin until they hit the range lows. And then once they hit the range lows, then I'm open-minded to it, right? Then I don't necessarily fade those ideas. But for the last 3.5 years, I've largely operated deterministically in just assuming that all alt season calls would eventually fade and they would be premature until, and look, I'll be the first person to tell you, like if in 2022, like if up here, you told me that we would be in mid 2025 and we still wouldn't be at the range lows, I wouldn't have believed you. Like I would not have believed you. I would have said there's no way that altcoins can hold on that long against Bitcoin. Absolutely, they'll be at the range lows well before sort of the middle part of the post-halving year. But I would have been wrong, right? Like I would have been wrong about that. And so that's, again, it's hard. It's really hard timing this stuff. So for me, it's not about predicting exactly when it's going to occur, but it's just like when it does occur, I think it's important to pivot, right? Whenever it does. And because it hasn't occurred yet, I just remain bullish on Bitcoin dominance and bearish on altcoins on their Bitcoin pairs.
I agree. Super well said. There are some signals when they trigger. It's probably best to listen to them. Those are the lessons that we were saying earlier, right? Yeah, you learn the lesson by not acting when the signal is telling you to do something or not to do something. I think Bitcoin is going to continue to suck the air out until we see Ethereum going home.
I actually made a video about it like a couple weeks ago. And I said, like, it was called Welcome Home Ethereum. Home is this fair value right here. It's kind of like what I call sort of the fair value logarithmic regression trend line. So that is what I consider sort of be home. And so, yeah, it took a lot longer than I thought it was going to take for Ethereum to get there, but it did eventually get there. So, yeah, I mean, Ethereum did come home. It doesn't mean that price immediately explodes to the upside. Or, I mean, you can see that in prior cycles, it can spend a while in the regression band. But yeah, like this was this was something that I felt like took forever to play out, right? Like it just seemed like it was never going to. And then finally it happened. But this is what happens every cycle, right? Where Ethereum goes up for a phase, but then it's only going up because Bitcoin's going up. And in reality, it's actually bleeding against Bitcoin while it's going up on its USD pair, right? So it went up there, it went up here, but again, while it was going up, it was just bleeding against Bitcoin. Same thing, right? It's been going up, but it's just been bleeding against Bitcoin. But the good news is that when it breaks down like this, it normally leads to some change in monetary policy, which leads to all Bitcoin pairs bottoming out. We haven't seen that yet this cycle. A change to monetary, but we haven't seen QTN, but who knows? The next Fed meeting is only a couple weeks away, so we'll see what they have to say.
If you chart everything versus Bitcoin or any altcoins versus Ethereum, it changes the view completely, right? Because sometimes you could have an appreciation versus dollars. If you chart Bitcoin versus Ethereum, it's really depressing, right? So,
right. Well, yeah, and actually, this is a really interesting chart because there's Bitcoin, there's Ethereum, and there's altcoins. Now, it's possible that Ethereum is no better than the collective altcoin market. I've always sort of assumed that it is a little different, but this cycle has been really testing my my patience on that idea. But one thing to think about is, I normally look at alt Bitcoin pairs, but if you look at alt ETH pairs, right, instead of dividing by Bitcoin, you divide by Ethereum. what you'll notice is that altcoins are getting really heated against Ethereum right now, right? They're getting really heated against Ethereum. And so I'm starting to wonder, just like all Bitcoin pairs topped out, I'm almost wondering if all ETH pairs are about to top out, meaning altcoins top out against Ethereum. I could see that happening relatively soon. I mean, you can see that they also topped out, in January 2018, November 2018, March 2019, right? Like we've seen this level be resistance before. I wouldn't be that surprised if in a few months this metric is back down here where Ethereum is outperforming altcoins. But I think in order to get that, you need to get some monetary policy shift.
I'm going to ask you the impossible question. Do you have any targets for Bitcoin?
I would assume that the cycle top will be in 2025, especially if we just assume that 2026 is a bear market year, just like 2018 was, just like 2022 was, and just like 2014, right? All the midterm years have been bear markets for Bitcoin. So I would say to some degree I operate deterministically in that regard, that like I just think the top will probably be in 2025. Hopefully it's later in 2025 and not already behind us in January. But again, as long as Bitcoin is above the 2024 high, there's always hope for it to go higher. If it's a right translated cycle, I still wouldn't expect it to make it to 300K this cycle. Like I don't think it'll go quite that high. I think the top is probably between 1 to 200, right? I mean, worst case scenario being 109, right, which is where it already went. But if the top is not in and we get a normal right translated cycle, then you have like 120, 150, 170. Like those numbers are possible in a right translated cycle. We just have to get a right translated cycle, which means that the macro needs to hold up, throughout the rest of this year. We need to keep seeing the unemployment rate remain low. We need to see initial claims remain low. If all of that can happen, right, if all that stuff can remain low, then we probably would get a right translated cycle. If it turns out that all this macroeconomic uncertainty leads to a lot of layoffs, then that is what can lead to those cycles where you don't really get that final whip of the cycle where all the higher risk stuff really starts to do well, right? In order for all that stuff to happen and to get all season, we have to navigate the market now without basically rolling over into a deep recession, right? And so that I think and the good news is that initial claims, despite all the headlines, are still relatively low. They're still, in like the 220, 210 range. They probably will spike relatively soon, because they spiked in May and June last year, right? So it's more of a seasonal thing. If you look at initial claims, and let's just average this out, let's look at like a 3-week SMA, you can see that in 2023 there was a spike in June, and in 2024 there was also sort of a spike here in like the summertime. So I'm guessing there's going to be a spike in initial claims this summer. The thing to watch is, does it stay below 300K? And I've sort of said that for the last 3 years or so. I've said, as long as it's below 300K, I think the labor market can pretty quickly recover from any of this uncertainty. Above 300K, I think it's going to lead into a negative feedback loop, where then layoffs lead to lower demand, which then makes it so that companies are not making as much. They lower their earnings forecast, which then leads, they end up laying people off to save money, which then leads to less demand again, right? So it's this like negative feedback loop. I don't think that feedback loop has begun at this point, but if we were to see initial claims go above 300K, then I think it would begin. So that's what I'm watching, right? That's what I'm watching to see if, what are the chances of a right translated cycle versus not. And as I've said before, right, as long as we're above the 2024 high, and as long as initial claims are below 300K, there's always hope.
If you look into gold now, it's like 23 trillion more or less in terms of market cap, and Bitcoin is probably near 2 trillion. So do you reckon it could go maybe double?
It's possible. I think that the way that you get there is if the S&P were to follow kind of like what it did in 1998, actually. Like if you look at the S&P 500 divided by the money supply, this correction that the S&P 500 just got, it actually got an almost identical correction. Just sort of cleaning everything up right here. But it actually got, basically an identical correction back in 1998, where it dropped like 20% over a few weeks, and then it got another rally up. So like if the S&P were to rally out of this mess over here, kind of like it did right here, into a higher distribution phase, then absolutely Bitcoin could reach those levels. the question that we're going to be asking ourselves for the next few weeks is, are we here and there's no recession, or are we here and there is a recession, right? And that's, I think, the question we're going to be faced with this summer. And I know the macro is boring, right? I mean, no one really likes following it because it's so boring, and you can probably have more fun watching paint dry. But that's probably going to be the topic this summer. So I'm going to be crossing my fingers that the layoffs do not pick up. I would like to see, tariffs honestly become not so detrimental for small businesses. I know personally people that are hoping that there's deals made in the short term so that they can get back to operating normally. So I'm really hoping that stuff gets resolved relatively soon, because remember, the way you get recessions is by stock prices staying low. But if we're only here for a few weeks and we go up again, then I think you sort of can kick the can down the road, and it might give us another year. So that's kind of what I'm thinking right now. And so that's the bull case, right? That's the bull case for the S&P 500, is that, this is just a sort of like a 20% drop, and it's scary, but as long as there's not a recession, it doesn't mean the S&P can't go higher. It's just, do you lose confidence or not? And so watch for this. If the S&P is at a new high in a couple of months, like it was back over here, then it's more likely than not that Bitcoin is just in a right translated cycle. If the S&P is not putting in a new high this summer, then it's more likely that Bitcoin is in a left translated cycle.
You have one of my favorite indicators on your platform, which is the social risk. Every now and then you show it on your channel, and it looks like retail is not in the room yet.
They're not. I mean, they really never came back this cycle in any durable fashion. It's kind of interesting. I don't. I mean, there's obviously a lot of theories as to why. This is the social risk, right? And as you said, it's made up of a lot of different metrics. One of those metrics that it's made from is like, people watching YouTube, crypto YouTube channels, right? Like YouTube views to various crypto YouTube channels. It takes a few seconds to load, but you can see that we actually never even hit the extremes that we had in 2021. And I think there's a few reasons for that. I mean, number one, interest rates are a lot higher, and we've been in quantitative tightening for a long time, right? During 2019, when we were in QT, social risk or social interest was also relatively low, right? It wasn't until quantitative easing and interest rates near zero that led to retail coming back. You could also argue that high inflation has kind of contributed to people checking out and not being as interested. Maybe they have bills to pay. They just don't have the same type of disposable income that they had in 2021 because they're just trying to buy groceries. And then I guess the other reason that I think that retail really hasn't come back is just because Bitcoin is the reality is that while Bitcoin is the king, retail only really comes back when altcoins start doing well, right? It's when the altcoin market does well, that's when retail comes back. And as we've seen, while altcoins have done okay at various points during the cycle, and many of them are well off their cycle lows, but they're like 50 to 70% down against Bitcoin, right? So, and I think a lot of people, when they come back too, they keep getting shilled all this like useless meme coin garbage that then keeps going to zero when they do come back. And it's almost like they find the cryptoverse. If they left it in 2021 and they try to give it another chance, they're almost finding it worse than in 2021 in terms of like how egregious some of the rug pulls have been, right? It's like projects aren't even trying to be, it's just they're coming out and they're basically going to zero within 24 hours, a lot of them. And I think that has been kind of detrimental for the altcoin market as well. And the good news is that markets have a way of getting people back on the right track and showing them what matters, and that's a good thing. So I think in order to get retail really coming back, you need to see a pivot in monetary policy. You need to see much lower rates. You need to get to the end of quantitative tightening. And if that all happens, then you might see retail come back. But until that time, you're likely going to see interest still stay relatively low, right? And I mean, here's like a 30-day moving average. And you can see that like you do get some spikes, but they just end up fading because, altcoins aren't really making the moves that people want them to make. And so retail interest just kind of fades again. So that's kind of the way that it's made up. And also, by the way, if you look at Twitter and you look at followers to various analysts on Twitter, or X, right, formerly known as Twitter, what's interesting is that, these spikes over here, we've gotten nowhere close to those spikes, right? I mean, at the actual top in 2021, these Twitter accounts got over 100,000 new followers in a single day. A single day. The most we've seen this cycle is right around 25 to 30,000, right? So again, it shows you that while there have been times that retail has been interested, they've not been nearly as interested as they were back in 2021.
I think it would be interesting to cross-check the price of Ethereum with the social risk, because I believe, like you said, I think retail comes in not when Bitcoin pumps.
Ethereum.
There you go.
Ethereum overlaid. Yeah.
Yeah.
And Ethereum has not been doing well, right? It's not been doing well, and retail interest is relatively low.
In every cycle, we have different things. Like we have seen NFTs, we've seen DeFi. So the weirdest retail trap kind of changes all the time, but it's always there. It's just a different box, right? That traps people in and takes liquidity off the table. But it's interesting to see how those metrics, right, on following on X, from Twitter and on YouTube and all that kind of stuff, is indicating us that they are kind of following the altcoin market, which makes sense because most of the people are going to degen into some projects and they're going to lose most of their money. They'll have to learn their lessons. They'll become maxi in 2 or 3 cycles if they stick around.
I feel like most people become maxis eventually, right?
Exactly. So that's for sure. Absolutely amazing having you on the show. Thank you so much. Like I said, I've been a big fan of your work. So thank you for producing so much content and for enlightening us with your beautiful brain. Really appreciate it.
Well, thanks for having me. Pleasure to be here. And if you're watching, if you're a subscriber of mine, make sure you subscribe over here as well. Support what he's doing.
Thank you so much. And hopefully I'll see you in Vegas.
Yep. See you in Vegas.
Fantastic. Thanks, Ben. Thank you so much for watching, guys. We will see you on the next one.